I don't throw darts at a board. I bet on sure things. Read Sun Tzu, The Art of War. Every battle is won before it's ever fought. Think about it.
A few weeks ago, I was watching my favorite movie, that is Wall Street 1987. And there's this dialogue between Bud Fox and Gordon Gekko that every battle is won before it's ever fought. And that dialogue is especially true when it comes to stock trading. Now, when I was a beginner about 2-3 years ago, I had no idea on stock selection, and I used to wake up at 11 o'clock in the morning or afternoon, and I used to go to investing.com and search for a random stock, any stock that was on my mind, and I used to draw a few levels and then I used to trade in that stock. And unsurprisingly, most of the times I made a loss. And over the last few years, my system or my tactics have improved significantly. And in this video, I'll share my method of analyzing stocks for pre-market analysis. Welcome back to another video, guys. I'm Vikrant, and this video is all about pre-market analysis and drawing levels on different stocks. So as usual, this video is mostly about practical aspects, but first we'll cover some theory. But before that, if you haven't already subscribed to my channel, click on the bell icon so that you'll be notified whenever I upload a new video. Don't forget to subscribe to my channel and don't forget to follow me on Instagram. Let's begin. So the first thing is, what is pre-market analysis? Now, first question you need to ask yourself is, what exactly does pre-market analysis mean? Now, I'm not going to go into technical definitions that you find on Investopedia or something. For me, pre-market analysis is all about a game plan to trading. If the market opens gap up, what's my strategy? If the market opens gap down, what stocks will I think about shorting? What will be my entry price? What will be my target? This is all about pre-market analysis. Pre-market analysis includes finding different levels for various stocks or indices and looking at the previous day high, lows, turning points, etc. We'll get into that in the practical aspect of the video. Live market analysis is what you do from 9:15 in the morning to 3:30 p.m. It's about looking at India VIX, looking at volumes of different stocks, using smaller time frame to find entry and exit points, looking at different patterns, and actually trading in the live market. And then we have post-market or EOD analysis, and it's about checking whether our levels held or maintaining a trading journal, finding out our mistakes and looking for ideas on the next day and looking at which stocks were active today, what sectors performed well. So this is a brief overview of the different kinds of analysis. So here's a list of 9 things that I check when I do pre-market analysis. The first one is previous day's data. Now when it comes to trading, I don't think of a new day as a new day. Like if I'm trading on a Wednesday, it's not a new day. It's actually an extension of Tuesday. So what happened on Tuesday is valid until Wednesday. When I trade on Thursday, what happened on Wednesday continues to happen on Thursday. Now this is how I think about it. Like every day is a continuation of the previous day. So the previous day's levels are very important to me. The next thing I look for is news and macro factors. Now, when you read something in the newspaper, it's already too late. That's why I gather all my news from various sources, and I look for things that can have an impact on the market. Like if a certain company announces its results, like this is the results season. If a company announces some results, then it can have a positive or a negative impact on the stock price, and that is a big thing to consider. The third one is looking at the previous day's high and low points. Now again, if the previous day's high is broken, there's a strong chance that the stock will rally up to the next level or the next resistance point, and the previous day's low is broken, then there's also a strong chance that it'll go down to the nearest support region. The fourth one and the fifth one are kind of related. They are support and resistance or demand and supply zones. Now support and resistance is something you learn when you're just learning about technical analysis. It's a very basic concept, but surprisingly most people get it wrong and they draw different wrong support and resistance areas, and people are confused, like, do I have to look at the candle's low point or do I include VIX or not? So we'll get into that in the later part of the video. Demand and supply zones are similar to support and resistance, not exactly the same, but there's a minor difference between them. The sixth one is turning points. Let's say that a stock is trading at 250 rupees and then goes down, and then it goes up to 260, 262 rupees, and from 262 it takes a U-turn, and then it goes down to 150, or and then it goes down to 230, 240, something like that. Now this can actually be a supply zone. Because when the stock reaches that point, there's a strong supply coming in and the stock falls. So it's important to know what are the turning points in a stock. The seventh one is looking at price action patterns, and it could be anything. It could be triangles, head and shoulder patterns, flag and pole patterns, or inside candles, or anything. So I like to look at patterns on a larger time frame and then on smaller time frame, not the vice versa. The eighth one is looking at global markets, whether that's Dow Jones Industrial Average, or European markets, or like DAX or CAC or FTSE, or Asian markets, and especially Nifty SGX, because the way Nifty SGX opens can tell a lot about how our Indian market will open. Because not all the time, but majority of the times, the way Nifty SGX opens, our market will also open the same way. Now there have been circumstances where Nifty SGX has opened in positive, but our market has opened in negative. So, but the probabilities is pretty less. And finally, there are other points like India VIX, etc. So these are the main things I look for, and I'll practically show you what my chart looks like. So I've opened my TradingView account, and you can see that this is Nifty's chart. So we have a 5-minute chart of Nifty, and now this talk is mainly about analyzing stocks, not the index. Like if you want to learn how to analyze an index, then read my blog. I've written like a few blogs on analyzing an index. So you can see that Nifty fell almost 1.11% on Friday. So I'm recording this video on a Saturday night, and Nifty fell more than 1% on Friday. Now this kind of fall was last seen on 21st December, which was a pretty good day for me, and we had seen about 3.5% fall in Nifty. So at around 2 o'clock there was a sharp fall, but then there was a 100-point recovery, and Nifty is still trading below this level. Now if you look at the FII data, positions of FII have been decreasing over the last few days. So the first stock in our list is ITC. Now ITC is one of my favorite stocks. I am super bullish on that in the long term, but I love shorting ITC in the short term. So the first thing I do is I go on the 1 hour time. So the first thing we have to do is go on the 1 hour time frame. Now when it comes to day trading, I trade on a 5-minute chart. So a 1 hour time frame is like a high time frame analysis for me. So this is the ITC's chart on 1 hour time frame, and you can see that this is an important level because the stock came up to this level, took a little resistance and came back down, went up to that level, came back down, and now it is trading at that region. Now if you look carefully, you can see that there is a strong possibility that ITC will give you a breakout, and there's also a head and shoulders pattern on ITC's chart. So this is the 5-minute chart of ITC, and this is the major resistance that I was talking about, and the stock has been going up significantly over the last few days, and you can see that there has been an attempt of the breakout, and if there's a positive momentum on Monday, we can expect a breakout in ITC. So my plan would be to go long if this breakout sustains. Now there are a few scenarios that can happen. The first one is ITC can open flat, it can go up and give a breakout along with high volume, and then it can either go up or it can retest and go up. So this is the first scenario. The second scenario is it can open flat and go down, take a support at this region, and then go back up. Now again, here there are another few possibilities. It could give a breakout or it could go down again. And finally, the third scenario is it could open gap down and it could break this trend line. So these are the few scenarios that can happen in ITC. Now my favorite scenario would be if it opens flat and gives a breakout. That would be the perfect trade for me. So on Monday, I'm expecting Nifty to open gap down because of the global sentiments. Now I'll be more sure of it by looking at pre-market data and looking at Nifty SGX. but I have a strong feeling that Nifty will open gap down. But even though it happens, I'll still be interested in taking a long trade on ITC. The next one is Z Entertainment. Now, if I zoom out on the 1 hour chart, here you can see that there's a triangle-like pattern that was forming, and there was a breakdown in the stock. But the volumes were not that great. On the 5-minute chart, you can see that there has been a breakout on the stock, a retest, and if the stock breaks this level, then I'll be interested in shorting the stock. So below this level I can short the stock, and this could be a target 1, and then we can trail our target and our stop loss. But if the stock opens above here, but if the stock trades in this area, then I will not take any trade in the stock. The next one is Tata Motors. Now, even though Nifty fell more than 1%, Tata Motors has risen 6% just on Friday, and the stock has seen a really good momentum of more than 10% rally over the last few days. And on a daily and on 1 hour time frame, you can see that there was a bit of consolidation and a breakout around this region. Now this acts as a resistance for Tata Motors, and if the stock gives a breakout at this region along with high volume, then I'll be interested in taking a long trade in Tata Motors. But I will not prefer to take a short trade in Tata Motors because the momentum has been really positive in it, and I'll only look for long opportunities in Tata Motors. The next stock is Bharti Airtel. Now I think that there is some news in Bharti Airtel, so I don't know the particulars of the news, but if there is, then I'll definitely look into it. And you can see that there is a gap in Bharti Airtel, and the gap has not been filled, and the stock is trading in a range. So if the stock goes below this, then I can prefer taking a short trade, and this can be a target, or at least, and if the stock goes above this point, I can take a long trade. Coming back to the 5-minute time frame, coming back to the 5-minute time frame, if the stock goes above this point, I'll take a long trade, and I'll take a short trade in this region. Now I'll definitely look into the news, and then I'll decide if I want to trade in this stock or not. The next one is TCS. Now TCS was a stock that I had traded last Monday. There was a positive news about TCS. There was a positive news about TCS Q3 results, and you can see that there has been like a breakout. Then the stock has been trading kind of sideways. So this was my analysis for last week's Monday, and the stock had opened gap up, and I was kind of sure that if there is a small gap, then the stock can expect a positive momentum. But if there's a big gap, then there will definitely be some profit booking, and this is what happened. And coming back to this week's data, you can see that the stock was trading in a range, and if the stock goes below this region, below this box pattern, if it goes below this with heavy volume, I can short the stock, and this could be our target 1. And if it breaks this level, then I can take a long trade in the stock. So in this stock, I can either take a long trade or a short trade, depending on where it goes. The next stock is SBI. Now you can see that this is a flag and pole pattern, and then there's a little consolidation, and then there's a down move. And on the 5-minute chart, you can see that if the stock respects this trend line and goes down, I can take a short trade, and if this goes above this level, I can take a long trade. Now there's a higher probability that the stock will go down based on the current market scenarios. The next one is Jindal Steel, and there is also a triangle like pattern that's being formed on the stock, and you can see that there's a triangle like pattern that's being formed on the chart. And let's zoom it to the 5-minute time frame. So there was a breakout on the stock, but unfortunately that did not sustain, and the stock went back down. So if there's another attempt of breakout, I can take a long trade in this one. This could be our first target, and we can book some profit over here, and then we can hold on to the trade. And if it goes back, then we can exit our position depending on how the market reacts. The next stock is DLF. Now DLF is not something I like to trade in, but the stock has gone up significantly along with Tata Motors over the last week. So here is DLF's chart, and you can see that there's a breakout in the stock along with high volume, and then the stock sort of consolidates a bit. On the 5-minute time frame, if the stock goes above this level, I can look for a long trade, and below this region I can look for a short trade, and I can take. And the next stock is Ashok Leyland. So let's go to the hourly time frame, and you can see that since Ashok Leyland is also a stock that is in the auto sector, along with Tata Motors, there has been a breakout in the stock, and the stock has been slowly declining, and this acts as a support for the stock. If this support is broken, I can take a short trade in Ashok Leyland. This could be a target 1, and then we can expect like a major downfall in Ashok Leyland. Now I won't prefer to take a long trade in this stock as of now, and I'll only look for shorting opportunities. The next stock is Hindalco. Now I had taken a trade in Hindalco on Friday, and luckily that trade was profitable. I traded this thing, so there was a breakdown in this stock, so I had taken a trade right around here. I'd booked my profit at this point, and this was my stop loss. It was about 2.5 risk reward ratio, and on the hourly time frame, the stock has been going down significantly, and I'll be interested in taking a short trade in Hindalco. So this is a triangle pattern that's being formed. Now this is not a perfect triangle pattern, so there's a big chance that it could fail, but if the stock opens gap down, takes a retest, then I can look for shorting opportunities, with this being the first target and this being the second target, or I can hold on to or I can simply wait for target 2. So I'll only take short trades in Hindalco. The next stock is Wipro. Again, you can see that Wipro has been going down, and I had also taken a trade in Wipro on Friday. So there was all of a sudden momentum at around 2 p.m., a really bearish momentum. So I taken a trade in Wipro as well, and luckily that trade was also profitable. I only had like one red day last week, and there was another day that was kind of loss making, but then I recovered the loss, and then I was kind of flat that day, so it was Thursday. So here you can see that if the stock goes below this level, I can take a short trade, and this could be our first target. Now this is like a really big target, so it's almost 6%. So I don't think that is a good target for intraday because it's very unlikely. But here you can see that this can be our first target, and then we can just hold on to the stock. So this is about 1.5 1.8%, so it's not that bad. The next stock is Adani Ports. So this is the hourly time frame of Adani Ports, and the stock has been trading in a pattern. The stock has been trading in a channel, and you can see that this is like an ideal channel. So the stock went up, took resistance at this point, came down, resistance, support, resistance, support, resistance, and now it is in a crucial zone. On the 5-minute time frame, you can see that the stock has been going down. So if it breaks the channel, if the low point, if this point is broken, then I can prefer to take a short trade in this stock, and our targets could be something like this. Like this could be our first target, and this can be our second target. So it can give a really good move when it comes, if this thing is broken. And then we have Tata Steel. Now there's a perfect triangle like pattern that's being formed on the hourly time frame of Tata Steel. So it's not complete yet, and you can see that there has been a few attempts of breakout over here and here, and so this could be an interesting pick for the next week. So this is the pattern. Now this was again a false breakout, and this was a false breakdown. So if this stock gives a breakout over here, then you can either take a trade on the breakout, and if it takes a retest, you can add some quantity over here, and then you can expect a positive move. And if it gives a breakdown, then you can short the stock around this point. If it takes a retest, you can add some quantity over here, and then you can expect a breakdown in this stock. So this is like an important stock for me because the pattern is pretty good. And if you just draw another trend line in this stock, it looks something like this. So yeah, around this part I'll be interested in shorting the stock. And then we have JSW Steel. On the hourly time frame, you can see that there is a sort of descending triangle that's being formed. So you can expect to take a short trade in JSW Steel. So if the stock goes below this level along with heavy volume, this could be a target 1, and then we can offload 50% of our position at this point, and then we can hold on to the trade. Now there are other stocks as well, but these stocks are not that important, or the patterns are not that convincing to me. And HDFC Bank is another stock that has been in the news, and it has recently declared its results. So if you don't like trading news, so the result has been pretty positive. So if the stock opens flat, then you can take a long trade in HDFC Bank, with this being the first target, and you can offload 50% of your position or something. But if the stock opens with a really big gap around this point, then there might be some profit booking. It will form some sort of range, and then when it breaks out of this range, you can take a long position over this point. So if you observe carefully, then these stocks, the stocks that I have selected, are from my previous video, like the video I had made on stock selection. These are the same stocks in that video. So this is like a continuation of that video. So what I'm trying to prove here is that, what I'm trying to say is that we are prepared for the next week. Like, there are a few things that can happen. Let's say that this is Nifty, and Nifty can open gap down, which is probably the most likely scenario. If that happens, then we'll be more inclined to take short trades, and that's why majority of the trades that I have looked into are short trades. Nifty can open flat, or Nifty can open gap up. Now Nifty opening gap up is not the most probable scenario on Monday, so my long trades have been less, but nevertheless I have also considered long trades, like Tata Motors being one of the examples. So I'm not trying to predict the market over here, and I don't really care if the market goes up or down, because if the market goes up, we'll take a long trade. If the market goes down, we'll take a short trade. If the market opens flat, even then I'll be more inclined towards taking a short trade, because personally I love taking short trades, as my probability of success is higher and my risk reward ratio is also better in short trades. So this is the game plan for Monday, and our analysis holds true for Monday. Like, I'll make a follow-up video on this analysis on Monday, and I'll post it so that you know which levels were right and what stocks were wrong. So what you can learn from this video is always be prepared for different scenarios. Like, these are the stocks that I'll be trading on Monday and Tuesday, and after that I'll do another analysis on these stocks based on what happened on Monday and Tuesday. So if the market opens gap up, I'm ready to take a long position in some of the stocks. If the market opens, let's say, gap down, also I'm ready to take some short trades. So if the market opens gap down, I can short TCS, and if it breaks this supply zone, if it breaks this demand zone and the 200 EMA, I'll take a short trade. Now this does not mean that I'll trade in the first 5 minutes candle. Like, if you consider Tata Motors, then let's say that the stock opens at this point in the first 5 minutes. That does not mean that I'll immediately take a trade in Tata Motors. I'll wait for some time. Let's say that the stock opens at this point, and then it goes down. There is some sort of profit booking for the next 5 minutes. It sustains this level, and then I'll draw a level like this, and if it breaks this level, then I can take a long trade in this, provided that there is some sort of volume during the breakout. So that's my game plan for Monday and Tuesday, and let's see how that holds on. Good morning, guys. This is Monday 18th January, and the time is about 9:01 a.m. and instead of ending the video, I'll continue the video and on a Monday morning and show you that what I do before the market opens. So I've opened a few tabs, and the first one is global indices. Now Nasdaq is down 0.9%, European markets are down, and what you can see is that even the Asian markets, Nifty SGX is down 0.2%. So this is a big deal for me, because Nifty SGX is like Nifty India. So I expect the market, our Indian market, to open about 0.2% down. Other markets are down as well, except a few exceptions. So overall the market sentiment looks bearish, and I'm bearish for the day. So this is Nifty's chart, and the market has not opened yet, and before the day starts, here's a little gap in Nifty. So you can see that this is the little gap that Nifty had formed, and exactly at the circle, Nifty had filled the gap. So yeah, the gap has been filled. So I still expect the market to open a little down and go down a bit because of the market sentiments and the data points. So 0.2% would be right around there. So this is what the market can open around. It's not a certainty, but it's like a guess, an educated guess, I would say. So it's 9:03 a.m. and let's reload the pre-market analysis. And Nifty is actually up in the pre-market about 0.6%, which is crazy, because Nifty SGX is down now. This is something that I had not expected, and maybe our analysis is wrong. So the advance to decline ratio is 17 to 27. Let's look at some specific stocks like HDFC is up almost 4%. Let me just mark it on the chart. 4% would be somewhere around here, and that is a huge gap. And if you just look at pre-market data and reload it, then the gap will decrease every time you reload it. But as of now, this is what the pre-market data says, and how it can mislead a lot of people. So these are some other stocks that are up 2-3% in the pre-market session. Now ITC is also up in the pre-market. Now Tata Motors is also up in the pre-market, and let me just mark out the level, which is about this. So it's kind of flat, not a big deal, and I expect the market to still be bearish, at least in the morning session, for about 1 or 2 hours because of our analysis, and I would still be inclined to take short trades, even though the market seems to be a little bullish for the day. So these are the stocks that are down, and if you look carefully, that Infosys is also down significantly in pre-market. So let's look at the chart of Infosys, and I'll just mark a few levels. Yeah, so if it breaks this support region, then I can take a short trade in Infosys, and this could be our target, this gap point. So this is like my analysis, and it's a raw analysis, nothing certain as of yet. So I'm still bearish on the market, and I've just reloaded it, and you can see that the gap has been down, and HDFC Bank is down all the way, and every time you refresh the pre-market data, you'll see that extreme gaps are actually not that big, and HDFC might open gap up, but it wouldn't be such a big gap of 3 or 4%, because even last Monday TCS had shown a gap of about 3.84%, and the gap wasn't that big, and there was profit booking immediately in the stock. So let's refresh the pre-market data again, and now it is the gap has been reduced significantly, and it's almost 9:15 a.m. Let's wait for the market to open. And the market has opened, and let's look at some charts. So Nifty has opened a little gap up of about a negligible gap, and it's sort of coming down right now, and as per our rule, we are not going to trade in the first 5 minutes in any chart or any stock or any index. And so let's look at ITC. This is ITC's chart, and the stock looks a bit bearish right now. The breakout has not happened, and Nifty is down again, and Tata Motors is also down. Now you can take a short trade in Tata Motors and get like a small target, and the next stock is TCS. It's down significantly, and I can take a short trade in TCS below that demand zone, and if it breaks the 200-day EMA. The next stock is HDFC Bank, and a big gap up in HDFC Bank, and that resistance could be our first target at around that blue region. So I'll just adjust it, and yeah, here you go. Then this is Infosys, and you can also take a short trade in Infosys, and the stock has opened down as suggested by the pre-market data, and that could be the first target. Hindalco is down a lot, and the triangle pattern has been broken, and we have almost reached the first target. Wipro is in the range, so I wouldn't take a trade in Wipro right now. Adani Ports is about to give a breakdown, and I can take a short trade after that. So Z Entertainments is also down now. I'm planning to take a trade in Z Entertainments by looking at the charts, and ITC is also in the no trading zone, and it has not given a breakout today. The IT sector and the auto sector is down. Now I think that the banking sector will be up while these two sectors will be down, and that's just what I think. It may not be true. So I think I'll take a short trade in Z Entertainments, and I'll let you know if I take any trade today. And I can also short Tata Motors, but since the overall trend is bullish, then I'd rather take a short trade in some other stock rather than Tata Motors. And I can also take a short trade in TCS, but the candle is too long, and I don't think that the risk reward ratio would be good in that. And here is Jindal Steel. I can take a short trade in that also. Now Bharti Airtel is still trading in a range, so I won't take a trade in Bharti Airtel as of now. Then Ashok Leyland, if it breaks this level, I can take a short trade in Ashok Leyland, and I'll just let the candle close, and then I'll decide what stock to trade in. Now when I'm trading in the mornings are usually very volatile, and I go in with a smaller quantity. Like if I have, let's say, if my capacity is 5,000 shares, I would only buy 2,000 shares because the market is much volatile and my stop loss will be bigger. And Nifty is sort of flat, not that movement, but it is still in the red, while Bank Nifty is up about 0.4%. So it is 10:15 a.m. in the morning. That is 1 hour since the market has opened, and now what I'm going to do is I'll show you if our analysis was right or not, because there's no point in doing analysis if it's wrong. So if out of all the trades that I had analyzed, even if 75 to 80% of them were right, that's good enough for me. So Nifty has been going down like what I had expected. It was a bit of pullback, but then Nifty is back down. So the first stock is ITC. Now ITC is kind of flat, so Nifty is down. That's why ITC's breakout might get delayed by a few maybe hours or maybe a day. So since ITC has not given a breakout, then that's why I haven't traded in this stock. So if this does give a breakout with high volume, then I can take a trade in this stock. The next one is Z Entertainments. Now I had personally taken a trade in Z Entertainments, and you can see that this was about my entry price. My stop loss was around here, and my target was at this point. So now why was my target at this point and not at this point? So um, the main reason is because there is sort of consolidation around this point, and I decided to exit my trade because my risk reward ratio was 3:1, which is not bad. So I exited around this point about, I would say, 10 minutes ago, and you can see that our analysis in Z Entertainments was right. So on the hourly time frame, the triangle pattern has been broken. There was a retest, and then there was a down move, and the stock took a support at 200 EMA. And this was also one of the reasons why I exited my trade, because there was support at the 200 EMA. And this is the 5-minute chart. The next one is Tata Motors. Now Tata Motors did surprisingly poor. My expectations were if Nifty opened in the green and Nifty is positive, we can expect a breakout. But since this trend line was broken, the stock went below its 20 EMA, and the volume was decent, not that high. And the stock is about to take a support at the 200 EMA, and it can reverse from here up to certain point. But yeah, so the short entry on Tata Motors was also right, but I did not take a trade in that one. I just took a trade in Z Entertainments. The next one is Bharti Airtel. Now Bharti Airtel was trading in a range. So my expectations were if this range is broken, I'd go for a long trade. If this range is broken, I would go for a short trade. Now here you can see there was a false breakout, but the volume here was very poor. So taking a short trade in this area was a bad idea. And again, this time also the volume was not that good. So again, I would have avoided this trade even though this was a profitable trade. And you can see that the gap can be filled, like this is the big gap in Bharti Airtel, and the stock is about to fill the gap. But you can see that the stock is about to take is also about to take a support at its 100-day EMA. The next stock is TCS. So I was a bit bearish on TCS, and TCS had broken the range, and there was a retest around this point, and then the stock went down with heavy volume. So I thought that this would have been a good shorting opportunity, but this trade did not work out, and I was wrong in this trade. So TCS is the first trade that we have lost and we have been wrong in. And you can see that the stock recovered pretty quickly, and the volume is also good. So this was a loss making trade. Next one is SBI. So here you can see that there was a breakout in SBI. There was a retest around this point, and then this could have been the first target. So let's say that you had missed this breakout, then you can take a trade at the retest, and this can be your stop loss, and this would be your target. Now the risk reward ratio isn't that good, but you can take a trade in this stock if you wanted to, and you can also keep your stop loss at this point to get 2:1 risk reward ratio. But again, at this point there was rejection, and this is a strong resistance for SBI, and the whole broader market is also not doing that good. So I did not think that this would have been that sustainable, and the stock is back in the no trading zone. So if it goes below this, you can take a short trade in SBI. The next one is Jindal Steel, and on the hourly time frame, this is what it looks like. So there was a triangle like pattern. Above this point there was a long trade, and below there was a short trade. Now I was more inclined towards the short trade because you know, the global market sentiments. So you can see that the stock did a good fall. It gave a little retest, and it's back down. So the stock is down 5%. So this would have been a really profitable trade, but I'm happy with the Z Entertainment trade. So this was also a good analysis on my part. The next one is DLF. Now DLF was also trading in a range, and it broke out of the range. Here you can see that there's a little breakout along with really high volume. So at this point you can consider trading in DLF, but if you do that, your risk reward ratio would have been pretty terrible. Like it would have been 0.6. so there's no point in taking this trade. And then the stock went up, took a little test, and then it's going down, and this stock hasn't played out yet, so I can't say that if this is the right move or the wrong move. But still, like, I wouldn't have taken a trade at this because the risk reward ratio wasn't favorable. The next one is Ashok Leyland, and I had two options in my mind. I either thought about shorting Zee Entertainment or Ashok Leyland, and my price of 11750 wasn't filled, so I went with Zee Entertainment. There was a fall in Ashok Leyland. At this point, you could have offloaded 50% of your position because this was a pre-existing zone, and then you can trail your stop loss to the cost, that is 1740, 1750, and the stock went further down, so you can exit some more of your position at every fall. The next one is Hindalco, and you can see that there was a there was an imperfect triangle like pattern in Hindalco. The stock gave a breakout, and then it's just falling through the roof, and you would have hit the target 1, target 2, and I don't think it will hit the third target because this is almost 3% down. So you can offload your so you can trail your profits to this point, and if the stock goes at this point, you can offload full of your position, and if it goes below, then you can hold on to the trade as long as it goes down. But the next stock is Wipro. So the IT industry was down, and my thoughts were that today banking sector would do good, and IT sector and the auto sector would not do as good. So the auto sector is doing terrible, and the IT sector has recovered. It was more than 1% down, and metal sector is also not doing that good, while banking sector is almost flat today. So here's what happened. You can see that there was sort of a breakout. Like, when this candle was forming, this was the point where you would think that this is a breakout, but the candle finished or closed in the no trading zone, and then it has given a breakout on the upside. Now, I wouldn't take a long trade in Wipro because the IT industry is down, the whole broader market is down, so I wouldn't take a counter trend trade in Wipro. The next stock is Adani Green. Again, there was a triangle like pattern, and the pattern was broken. This is the first target. It was hit. Now you can offload 50% of your position here, and this is the second target. So Adani Ports is doing good. The next stock is Glenmark. So you can see that there was like a triangle like pattern. The stock had broken its support region, and you could have taken a trade in this, and there you would have gotten 3:1 risk reward ratio, and it would have been a good trade. The next one is Tata Steel. Now Tata Steel is also one of those good trades that you could have found. And on the RD time frame, you can see that there's a triangle like pattern, and this was a very convincing pattern for me, and then there was just free fall from this point. And I wish I had taken a trade in this one instead of Zee Entertainments, but then still I'm happy with that. So there's a strong breakout, and you could have taken a trade right at this breakout, and then there was no retest, but the stock has gone down a lot, about 5 or 6%. So this is a really good trade. And Nifty is down 0.88%, and this is the JSW Steel's chart, and let me just zoom it out. So as per our analysis, this was the short point. So if the stock goes below this point, you can take a short trade, and your first target would be this, and this would have been your second target. Now the stock is going down below our second target, but even if you close all of your position at the 100 or the 200 EMA, then also it's fine. So this is again another great trade. So today has been a great day, and this was HDFC Bank. So HDFC Bank has declared its results, and this was our resistance zone for HDFC Bank, and you can see that the stock is kind of struggling to go above this zone. So this would have been a profitable trade, and HDFC Bank is another great analysis. And this is the chart of Infosys. So as per our analysis, we had to take a short trade in Infosys below this support region, and then this would have been our first target. So the stock is kind of trading in a box like pattern, and if there is a breakout, then this target can be hit really quick. but if the stock goes at this point up to our cost or entry price, then you can close your position in no risk zone. So these were the stocks that I had analyzed, and out of this I think only one was wrong, that was TCS. And based on my experience, I don't have a good track record with TCS because I have made a few losses in TCS. So out of these 17 stocks, only one went wrong, and I'm pretty happy with the result. And Nifty is down almost 1%. So if it breaks this point, this could be our next target. And the whole point of this video was that if you are prepared for any scenario, if Nifty were to open gap up in a positive direction, we would have taken a long trade in ITC or Tata Motors. But since my view was bearish on the opening, I had more of short trades, and then majority of the trades were in the right direction. You can see that in just 1 hour, our trading day is over, and this has been a really good trading day. And yeah, this was it. So I hope you learned how to analyze stocks before the market opens, how to find out levels of different stocks, and how to actually trade. And Nifty is down more than 1%, so that's a good day for me because I'm a short seller. And this was it. So hope you enjoyed the video, hope you learned something new. And if you did learn something new, then don't forget to follow me on Instagram and subscribe to my channel for more videos. See you next time. Till that time, take care. Bye bye.